I don't think enough people are thinking about what makes September 30th so special and why $40 matters so much. Right now, you're probably focused on the fact that silver has spent the entire month above $40, but we need to zoom out and see the bigger picture. Look at this chart of silver price, and I want you to notice the price action on August 29th when the market refused to let silver close above $40. That big wick shows how silver ran right up to the $40 blue line, and then they beat the price back down. While the hypers overly focus on silver price spikes, spikes mean nothing when it comes to our wealth. What does it matter if silver spikes to $1,000 an ounce? It's about as impactful as hitting a half court buzzer beater in warm-ups. Cool story, but it doesn't count for anything. What we really need to focus on are these pivotal moments that can cause the market to shift. That's why 10 days from now, silver is set up to completely change how Wall Street looks at silver. We watched gold set records for months, but September 30th is set up for the day that silver shines brighter than gold. Not a 1 day spike, not a headline pump, a quarterly close, the kind of milestone Wall Street just can't ignore. Price isn't just math, and charts aren't just crystal balls. They're more like traffic signs. They don't drive the car, but they warn you what's ahead and how fast you should be moving. For decades, the talk has always been about the price spikes of 1980 and 2011, but every spike got smacked down. And the belief has shaped how investors treat silver as the little brother of gold, the runner up. But what happens when $40 silver becomes the base, not a spike in space? What happens when the spikes from the last 50 years stop being the top and quietly become the floor? This past Friday was triple witching, one of the most volatile trading days on Wall Street. The market makers did their best to try to crush silver back under $40 all week, and they threw everything they could at it. And silver just sat there and said, nope, not this time. So let me officially flip this conversation completely around. Maybe the real risk isn't that silver fails at $40. Maybe the real risk is what happens if it doesn't fail. If silver holds the line, what changes forever? I'll explain that. But before I do, I just need to say, what is good, Stackers University? It's so wonderful to have you here with me today. Don't forget, every time you hit that like button, you save another stacker by helping me get this video out to more people. And when you subscribe, you make sure I don't disappear from your feed and I keep bringing you the fire content. Now, back to silver being on the verge of history making in just 10 days. Silver has touched the $40 summit, but it's never built a house there. A quarterly close above $40 would be historic. It would mark the first time silver has turned a peak into a platform. That's why this is a line in the sand. I know with all the hype out there, it's hard to feel like this time is different. But the world is extremely different from where it was 45 years ago in 1980, heck, even since 2011. And let me quickly point out three major reasons. Number one, the money supply. Over the last 25 years, the M2 money supply across four central banks, the Fed, the People's Bank of China, the Bank of Japan, and ECB, has exploded from 16 trillion to $95 trillion. That's 6 times bigger in just 25 years. Number two, global debt. In that same stretch, total global debt has nearly quadrupled from 84 trillion to 325 trillion. That kind of monetary expansion drives inflation, whether governments admit it or not. And the crazy part is while gold has responded, silver has barely responded. Number three, the cost of production. Right now, for the top 5 silver producers, their all-in cost is around $26, which means a $40 silver floor equates to profit margins that exceed 50%. Those are numbers Wall Street just can't ignore. A historic $40 close quarterly with 50% margins for these stock miners will be like a religious experience for the financial markets. It suddenly converts them into believers. They'll stop saying silver never goes anywhere, and they have to start saying this is a repricing for silver. So, what's pushing silver towards this line in the sand? Number one, the Fed. Interest rate cuts are finally here. The dollar is weakening and real rates are moving lower. That's fuel for precious metals. Number two, industrial demand. Silver isn't just a monetary metal, as we all know. And the fact that a recession hasn't hit means that we may not see industrial demand fall off a cliff, especially with all the electrification going on globally as a part of the backdrop. Also, the reality that we may be in stagflation or going towards stagflation means that silver won't fall off in terms of demand. Number three, The gold to silver ratio. Well, I believe it's a factoid. I know many of you like to monitor this. So, what I will say is that even after this run in silver, the ratio suggests that there still is a ton of room for that ratio to fall even further, which means silver has a lot more room to rise. And number four, investment demand. After more than 2 years of outflows, ETFs are finally starting to see inflows. Institutions are starting to sniff around these things, and we saw Saudi Arabia join the party, while us stackers, well, we just continue stacking. And since I mentioned gold, let's just zoom out for a second because we all know silver doesn't run by itself. Gold is the mama duck of the metals market, and silver is like one of the little ducklings. Here's what's been really crazy about the gold and silver markets. While central banks have been gobbling up gold for the last 2 years, Western investors are actually liquidating paper gold hand over fist. In fact, the GDX shrank by almost 15% over the last 2 years. Meanwhile, physical gold and silver have been among the best performing assets. What this potentially means is most of the move that we've seen so far in the stocks has really been short covering rallies. This means investors, especially retail, haven't even shown up in the market yet. And that's bullish. And if the mama duck is in the bull market, well, the ducklings, meaning silver in this case, are surely to follow. Bringing this back to its potentially historic close above $40 and the chart pattern that it creates, where all of a sudden $40 now becomes support. It sends a strong psychological message that silver is here, that silver belongs here, and silver plans to stay here, or hopefully go a lot higher. You know what I mean. But this leads to behavioral changes that causes shifts in money flows. $40 isn't just a number anymore, it's a mindset that causes money managers to pay attention to silver. It makes momentum players pile in. Ultimately, the price of silver is destined to go much higher. The part that really excites me is what will happen to the silver miners. While the silver miners have had incredible moves, it's still not too late. As the saying goes, there's still time, but no time to waste. Here's the bottom line. The quarterly close means even higher prices aren't just a moonshot dream anymore. They're realistic targets. Before you get overly excited, remember, nothing goes straight up. A strong dollar, profit taking, COMEX games, any of these things can cause a pullback. The key is staying focused on the big picture because it isn't about the daily tick marks on the price sheet. This is about a quarterly legacy. If silver closes above $40 at the end of this month, history is written. So here we go. 10 days ago. Are you ready? In the comments section, what do you think a quarterly close above $40 means? Just for the fun of it, what's your average cost basis for your silver? Or you can simply put an A plus in the comments if you love stacking, want to show me love, or if you just want everyone to know that you always stack smarter and never stop learning.